All right. Hi, everyone. This is the cash flow video. I'm going to teach you and show you how to use my cash flow forecasting worksheet. Cash flow forecasting is one of the most important things for small business owners. And I have an Excel tool that I want to share with you. And I have used this tool with a lot of my clients. And this has been one of those things that I've had business owners tell me is a game changer for them. And being able to look forward a couple extra months, even a year in advance, and seeing how we can make decisions to affect future cash flow is one of the things that can make all the difference for you and your business finances. So you can take the information that you've gotten from your bookkeeper and pop open your QuickBooks if you have it, and then you'll be able to use that information to help you fill out this cash flow forecast. I'm going to walk you through my worksheet. Every business is going to be different. So I'm just going to give you a couple scenarios as we go in. And, at some point in time, you might be able to pop into this, do it, rock it, run with it, which is great. I hope you can do that. And then if you do need help, if you're like, hey, I don't know how to do this, I don't want to do it, but I can see why it would be helpful for me and my business, reach out to me. I'm happy to help you. I think it's something that we can tackle in a strategy session or maybe just a couple sessions and get you all set up and on your way and do some training for you. So if you want to reach out, please do so. If you want to tackle it on your own, please do so. I just want you to use this. I want you to have it empower you to make better financial decisions in your business. Okay. So I'm excited and I'm going to go ahead and share the worksheet. This is my cash flow forecasting worksheet for small businesses. So I'm excited to show it to you. All right, so I'm going to basically explain what this is, how to use it, and we'll go from there, okay? So this is an Excel worksheet. If you're not familiar with Excel, that is okay. If you can type numbers, we can do this together, okay? So I do have formulas set up in here. So I would like anything that I really does not need to be touched has been put in gray. So like this section in gray is a sum formula, and then all these gray sections here. So don't touch anything in gray because it's just going to help you kind of make sure that everything continues to work as it should, okay? But anything that's white, feel free to put in numbers in here, okay? And then you don't have to make anything negative. I've taken care of that already. Cash in is positive, cash out gets taken out, but even so, I've put in the formulas so you don't have to worry about that. So you can just put in the positive value. So, even though cost of goods sold is a negative and it's cash out, just put all the numbers in a positive number, okay? Because my formulas will show that it's negative, like it'll properly take it out. So just don't worry about doing any negative math in your head. All right. So the way that this works is that we start with a beginning cash balance, and then we record cash in and then cash out. And cash in can come in a number of different ways. So it can come from revenue that's earned on a cash basis. It can come from, and I'm not talking about accounts receivable because you might have invoiced a customer, but until you actually receive that check or you receive the payment, I don't want it in your cash flow, okay? Cash out can be anything that you pay out in the business: owner's pay, payroll, cost of goods sold, rent, office expenses, anything, you make your credit card payments for all of your business transactions, anything like that, anything you pay expenses in the business is cash out. You will see this on your P&L. So keep that in mind. This will be on your profit and loss statement. This right here and most of this right here will be on your profit and loss statement. Now there's other ways that cash goes out of the business that might not be on your profit and loss. So if you repay a loan, or if you move money into your tax savings account, or if you, if you're making a bigger credit card payment, or there's other reasons sometimes that things move away out of your bank account, okay? So I'm thinking like transferring money away from an operating account into something like maybe even profit savings or something like that. This will all affect your cash inflow and what you can use to operate your business. So we want to record those things here. I've listed a couple of these here, but I also gave you a little bit of room to add your own cash out scenarios. You're going to have a lot more transactions and things to put up here and up here, but maybe not quite as many transactions down in these two sections, okay? And then there's sometimes other ways that you get cash into the business. So maybe you've applied for a loan and you get $50,000 and it comes into your account. Well, you need to be able to see that. Maybe that happens in April. So we want to make sure that we get a $50,000 cash recorded in April, okay? And we'll walk through how to do this. Maybe there's another outside investment. So maybe you've done like a crowdfunding, you've done some crowdfunding for your business, or you've done something where an individual gave you money for an investment into the business. Anything like that will affect cash flow, but won't necessarily show up on your profit and loss statement as income. That's actually a balance sheet transaction. And I'm not going to get into explaining the balance sheet at this time, but what the important thing is that there's different ways for cash to come into your business and a couple different ways for cash to go out of your business. And this is try and record all those things. Okay. Let's see. So I like to start. Oh, and then I've put something down here for you, and it's just kind of a fun little tool, if you will. I've put something in here where it says, don't let cash go below whatever number that is for you. So if you are $1 million business, maybe you realize you don't want cash to go below maybe $50,000. Maybe that's kind of your safety net number. And if that means you don't want it to go below 50,000, then these numbers are going to turn red when you're below your number. Okay. But maybe you're a business that, has a regular operating cash flow of around $5,000 a month. If that's the case, then maybe you're like, really big scary number is when cash goes below 2,000. You are freaking out. So maybe you want it to be 5,000 or maybe you want it to be 6,000. Maybe you like to keep $6,000 in the bank at all times. So this number is meant to be dynamic. You can change it based on what's important to your business. Okay. It could be $200. Maybe $200 is the number that you want, you want to see when you go below $200 in here. This is totally up to you and what you are comfortable with. Okay. So I'm just going to go ahead and leave it, I think, at $5,000 for now. We're going to deal with kind of maybe a business that's operating somewhere between like I don't know what we're going to do. Maybe it's close to like $100,000 a year. Okay. In revenue. So I actually like to start, I'm making this video in March of 2020. And because I already have January and February numbers, I actually like to prove out my first couple months before I get into forecasting. So I like to make sure that I'm understanding how this is working and that it's working when I look at the numbers. So I'm going to start by looking at the balance in the bank account, and it might be just a key operating account. So maybe I'm looking at the main operating account, and I might have a tax savings account, or I might have a profit savings account if you're into profit first, but I don't include that really in my cash flow forecasting because I've reserved that money for other things. Okay. So I'm not going to include that here in this balance. But what I am going to look at is my operating account. If all my ins and outs are flowing out of that operating account, I want to know what the beginning balance is. So I'm going to say it's $5,000, and I can find that when I look at the balance sheet as of December 31st, 2019. All right. And then I'm going to pull my January P&L, and I'm going to say, okay, I'm cash basis. What is the revenue that came in during that time? So I might look at it and I go, okay, I made $10,000 during the month. And then I'm going to look and I'm going to see, okay, I had a little bit of cost of goods sold. I bought some supplies. Maybe I'm a product business. And then there's payroll. Maybe I'm the only person on the payroll right now. Or no, maybe I have a couple staff and they help me pack boxes. And so maybe it's $1,400, and then I have a little bit of like payroll tax. I'm finding all this information on the P&L. We have one little office that we rent or storage, and that's $500 a month. Didn't do any travel. I'm still looking at the P&L to find out all this information. Spent some money on office expenses and did a couple other things. Oh, and because I'm a business owner, I took an owner's draw. Try not to bump my microphone here. Owner's draw of $5,000. Okay. And this owner's draw could actually go down here as well. Because an owner's draw, actually, when you take money out of your business and you're not getting paid in payroll, that does not show up on your P&L. That's actually a balance sheet transaction. Okay. So this is one of those things. Technically, it's a monthly expense. So I want to make sure that it gets put in here because you should be consistently paying yourself as a business owner. But it's not going to show up necessarily in your payroll line. And sometimes I like to separate it out from payroll. I do like to separate it out from payroll because sometimes we need to fluctuate our draw either more or less, kind of depending on what's happening in our personal lives and also what the business needs and what the business can afford. So I like to forecast those two things separately, just general payroll for your staff and then your owner's draw. I like to have those on two separate lines because when we, plan, we want to be able to fluctuate those separately. Okay, so when I'm looking at my P&L, maybe there's a couple other expenses. You can customize any of this right here. Maybe there's another $400 expense and maybe a $700 expense. Okay. So I can, change the names of these. If I needed more room, I could also, you click on the row by clicking on the left mouse clicking on this and then right mouse clicking and go insert. And that gives you a new line. So if you didn't have quite enough lines here, you can do that. And then when you check the sum, you don't have to do this, I'm doing it for you. When you check the sum now, that new line that you've added is going to be included. Okay, what you don't want to do is you don't want to come down here to the total line and then insert from here, because the way that Excel works, it will exclude that line. It's out of the range. Okay, so when you add lines, try to, oops, I just saved and then tried to undo. Okay, when you insert lines, you want to do it inside the existing range, okay? Inside the existing range. That's what this one is, and now it's included in the sum. And the good thing is that means now that across the board, it's included going forward. So you don't have to do any Excel formula fixing. So I want to make sure to tell you about that. All right. That's all I want to put into the expenses right now. And then maybe I was also having a goal to repay a loan. So maybe I repaid an extra $200 on a loan, and maybe I put, $500 into tax savings during the month. Okay. And then that's all I did. So this is telling me total net changes in cash. It's adding everything up in the proper way, income out. And then it's telling me that my net changes in cash. So I actually had more cash going out than in the month. And so then that gives me my cash at the end of the period. Okay. And it's highlighted red because it's below my cash number that I put here. So, and I think for the volume of this business, I think actually $5,000 is a good number because I'm looking at these operating expenses and I'm going, okay, sum of all of these operating expenses is just around $4,400. So that would cover about a month's of operating expenses if all the revenue dried up. So I'd like to keep a little bit of a buffer in an account like that. Okay, that's just a little side tip. So now if I'm looking at my P&L and all these numbers are looking right, then I can look down here and go, is this actually my cash at the end of January? I can check my bank account or I can check my financials and say, hey, this number looks right. If you're looking at your bank account and you've written a check that hasn't cleared yet, that might throw off your, it might throw off your account right now. So you might look at your bank account, look at your financials and see what the difference is there. Make sure you're understanding that, which shows up on your bank reconciliations, which your bookkeeper should be doing for you every month. Okay. So this is a good way to check. So you can kind of go through this process and go, okay, like maybe this isn't the number. And maybe I only have $1,000 at the end of the month. So what the heck happened? If I can see my revenue streams in and I can see my revenue out, like what was not recorded or what did I miss? And then you can, dig into the details of your financials, ask your bookkeeper maybe and say, hey, there's some money missing. What's going on? And then she might go, oh, well, Hannah, you actually took an $8,000 owner's draw in the month, not 5,000. And then, or maybe you took two checks. Maybe you took your December check on January 1st, and then you took your January check on, January 31st. You actually had two checks come out, which then would make your cash closer to what you saw your bank account being. So there's always a reason why cash is, not what you think it is. So it's easy to go and explore, and that's why we have the financials. Okay. And that's why we need to look at it every month too, so that, you don't get kind of shocked by some of these things. And it's really helpful. Okay. So you basically, what I'm going to do is just kind of copy over January and change a couple things. So I'm just going to do this. I wouldn't recommend doing this unless you're, pretty familiar with Excel. I'm just going to change the owner's draw amount for February. So we're just going to say, again, I'm looking at actuals. I am looking at actuals and I'm filling all this out. So then I can see, oh, okay, well, like now this month had a positive change in cash flow. And then now my cash is still not where I want it to be, but I at least like it's getting back up closer to that 5,000 that I want it to be. Okay. So then now we get into the current month, and this is where we start to have to forecast. Okay. So March, I'm recording this video at the very end of March. I might have a really good idea of what my revenue is, and maybe I realize it's $12,000. And then I can start to say, okay, well, I kind of am starting to see trends. So I'm starting to actually see that my trend is actually that my cost of goods sold is 10% of my revenue. I'm starting to see that, and I'm starting to see it on a regular basis. So I'm actually just going to pull that formula forward. And, I try to just do out or forecast out about 12 months at a minimum, if we can, at least to the end of the year. And then I'm saying, okay, well, my payroll is about the same. I'm not really anticipating any changes to that for the next year. So I'm going to keep that about the same. And then my rent, hey, that's fixed. I have an agreement. I know that it's just going to be $500 to the end of the year. And then when I drag like this, it will copy. Sometimes it will like add one. So it'll do like 501, 502, 503. And if that happens, you just go to fill series or copy cells. So if I went to fill, it would do the like series like that. But if I just wanted it to copy, I just go to copy. Okay. And let's say office expenses. I knew that like January and February, I was buying a lot of office expenses, but I don't really have much intention to buy any office expenses for the rest of the year. That was kind of a one-off. I bought a new printer and then I needed some ink. Okay. So maybe I'm going to keep office expenses pretty low, but maybe I realize, oh, I'm going to need some more ink in September probably. This is all just this is actually based on your budget. So if you've done a good budget, you can use your budget to sort of fill out some of these expenses and what you think you're going to be spending. And then when it comes to forecasting an owner's draw, I'm going to say, hey, I need $5,000 a month for me personally. Like I can't do with much less than 5,000. So I'm going to put that in here. And then maybe I have a goal that by the end of the year, I'm bringing home $7,500 a month. And that's a goal that I have. So I want to see what it looks like and really what revenue numbers I have to hit in order to be able to do that. And let's just say that this $400 is a fixed expense. And then this other one just ends up being every other month. Okay. So I'm going to pull that over. Just kind of gives us a little bit of variability. So expenses are actually easier to predict sometimes than revenue. Revenue is the big question all the time. We're always trying to predict sales. And you can look at this in a number of different ways. So you can look at revenue and try to figure out, okay, what happened last month? How is it going to be similar to this month? But when we start to get further out, you're trying to basically predict the future with your revenue. So you can do a lot of things. You can look at prior year, what was happening prior year. You can look at, your growth over prior year. So say, you grew 20% from January 2020 over January 2019 and you saw the same percentage growth in February, then maybe it would make sense to continue that assumption and say, well, I'm just going to predict 20% revenue growth over 2019 on a flat rate. You could do that. You could also do some things that are a little bit more nuanced where you say, hey, I know I have this huge sale in March and I'm trying to reach, a goal of $50,000 for this sale. If that's the case, then like you can put those types of assumptions like very specifically, or maybe you have extreme seasonality and you have some sort of like predictions there. Maybe that like May is always double what April was because of your seasonality, or maybe you surge in spring break, but maybe spring break was in a different month last year than it is this year. So think through those things and think, when are the surges in my business? Understand your numbers from the past, and that will help you predict your numbers for the future. Okay. So we are going to assume that like this business is in a pretty steady state, but it's growing, and because it's spending money on marketing and it's getting out there a little bit. And what I'm going to do is actually just assume about a $500 growth every single month. Okay. So this is not totally standard. I mean, especially if this is like a product business, like you're always going to have some seasonality when people shop, when people don't shop. But I'm going to put this in just for an example purpose. Okay. So this is a business that's making about 160,000 for the year. And you can see that because I put in a formula of 10% for cost of goods sold, the cost of goods sold is going up along with revenue. And then my labor is staying the same. My rent is staying the same. A bunch of these other things are staying the same. So, and let's just say I'm going to continue my loan repayment throughout the year. And then I am going to continue my tax savings too. Okay. So we're going to look to see what the effects of this will be. So actually, this is all looking really great. We have positive cash flow all throughout the year, besides that first month. And then in March, we're going back over our, cash flow. We don't want to go below 5,000. So we're starting to get into a really good cash flow position. And then when you look at this, you're like, wow, by the end of the year, I'm going to have $40,000 in cash flow. All of these things remaining the same. Okay. So that might make you go, okay, I've got $40,000 potentially that I could be doing something with. So what happens if maybe I hire out more help? Maybe I raise somebody's hours to be double what she was doing. And you start to play around with, okay, if I could get more help, I'm actually going to make this a percentage. Actually, what I'm going to do is I find payroll taxes tend to be on average about 10% or 11% of payroll. So I'm just going to put that assumption in here. So maybe we get you some more help in your business, okay, by adding some more payroll. And then maybe you hire like a new subcontractor to take over marketing. Maybe you do that in May, or at least to take over your social media for a little bit. Oops. If you double click, it'll pull down. If you drag, you can drag down or you can drag it side and it'll copy the cells. Okay. So then now we start to get into a position that it's like, okay, I can see, what's happening here. And maybe I can start to set some goals. And maybe I can say, okay, well, now that I'm going to have my tax savings taken care of and all these other things, maybe then I'm going to start building up just an operating savings account, and I'm going to start saving $1,000 a month. And then you can start to see, okay, well, I still have operating cash flow, even if I put $9,000 aside into a different savings account. So all these things will really start to help you figure out what you need to do in your business to get where you want to go. So this will start to go, okay, well, what happens if like all my revenue dries up in April? Okay, well, that's a realistic thing in the current pandemic. If that were to happen, but remember I had those formulas set up. So I'm going to change this because when I deleted this, it started 0 plus 500. Okay. So if that happens and you use all your revenue in April, then what does this look like? Okay. So then we have some pretty bad months of cash flow. All right. Well, that might mean maybe we don't start that savings account just yet. Okay. And maybe we don't hire that person just yet. Or maybe you take your, owner's draw down that month. And then we can start to see, okay. You're starting to get into a healthier position by the end of the year. Okay. You never dip below 0. You definitely dip below your, ideal number, but you never dip below 0 in this situation. And there you go. So this is why this tool is helpful. It helps you say, what if this happens? What if that happens? What if I don't do this? What if I do that? And you can start throwing the numbers in here, and you can even start to put it in timing, like, well, I want to hire somebody new, but maybe instead of hiring in April, it makes more sense for me to hire in June. Let's play it out. Let's put it in the forecast and let's see what happens. The other thing that you can do is you can copy this. So you can go right click on the tab, and then you can go create a copy. You can move it to the end. And then you can do scenario 2, scenario 3, scenario 4. And you can start to, play around with different things. Now, I would make sure that you have a really good base scenario before you make your copies, because the 2 sheets won't link together in any way. So if you change a base scenario and a base assumption, you're going to have to update it on all the different sheets. Okay. So this is a lot, but I get super excited about this tool because it is, like I said, the most helpful thing that I have done with any of my clients when it comes to decision-making and long-term decision-making. So I really want you to spend some time trying to understand this concept, and spending some time working on your numbers in your business, and trying to just figure out how to survive like tough times, how to survive when your revenue cuts in half, when you have $6,000 and then it takes you a long time to ramp back up. These things are realistic right now, and we want to plan for the worst, hope for the best, but we can understand what strings can we pull right now to make a difference in our business. Okay. So that's what this cash flow forecast is all about. I hope this is helpful to you. I gift you this worksheet, and I hope it's helpful. If you want to share it with anybody, please do. Please just, make sure that you leave my logo on there just so people can find me if they need help. And just let me know if you need any help on this. I'm happy to book a strategy session, or, a quick phone call just to help you get over an Excel issue or something like that. I'm happy to help. So take this, run with it, do what you need to do, and go and operate your business successfully, and, stay safe and stay sane in all this. All right. Thank you. Thank you so much for taking the time to watch this somewhat wordy video. Covered a lot, but I hope it's super helpful to you. All right. Bye.